About 87 points gone on the Nifty.
We broke yesterday's low by about 10 points or so, and we are right there at about 15,600.
84 points cut on the Nifty is what we are seeing, but there's a tad bit recovery from the lows.
Right before 1 o'clock, the market did break yesterday's low, but it's been in a holding pattern ever since. We're going to end with a 60-point cut, which means that from the lows, we are going to be off about 60 points as well.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Benchmarks close with cuts dragged by IT and metal stocks. Sensex ends in the red for the third straight session. Broader markets underperform benchmark indices. RBI tightens norms for securitization of debt, bars banks from undertaking such exercises for loans with less than 365 days maturity. The move could impact several NBFCs. State-owned lenders Bank of Baroda and Bank of India surge in bullish commentary from Morgan Stanley. The brokerage believes the two lenders offer the best relative risk-reward. Bank of India, Indian Bank and PNB hit fresh 52-week highs. Crude oil prices rebound after plunging by more than 3% as the implementation of sanctions on Russian seaborne crude oil eased concerns about oversupply. Meanwhile, metal stocks fall on softening metal prices as the market prices in hopes of further easing in China. Tata Steel, Hindalco and JSW Steel close with cuts. IRB Infra surges 2% on the back of robust traffic growth in November across all projects in all vehicle categories. Astra Microwave zooms 5% on its fundraise plan, while Bajaj Consumer gets a 2% boost on news of a likely buyback. Here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Rahul Singh of Tata Mutual Fund, and in Big Corporate Voices, we have Anil Singhvi, Executive Chairman of Sri Digvijay Cement, and Sunil Duggal of Vedanta. Today, we have a good mix of commodity news from crude to cement to steel and more. And to the action from the last street now, market ended the day in the red after Sensex fell for the third consecutive session. IT and metal stocks remained the major drag. Broader markets underperformed the benchmark indices. Prashant Nair is here with more details on the same. Prashant.
Well, the market did come up towards close. In the last 30 minutes, there was almost a 60-point rebound, and the Nifty finally ending about 50 points lower. Same kind of recovery, the Bank Nifty, not quite the same as Nifty, but to a lesser degree. The dollar rupee is a worry point, even as oil prices have come off, and this largely went unnoticed, but the rupee is lost. It lost heavily big today, and over the last 3 days, it has lost about 150 paise against the dollar. Something to watch out for. Globally facing sectors were under pressure. IT, metals and pharma. PSU banks as an index was higher, although, the big one, which is SBI, did not participate today. On the Nifty, losses coming through in names like Tata Steel, Dr. Reddy's, Hindalco, Infras, TCS, Union Bank, Bank of India and UCO Bank were the PSU names, which were some of the top gainers that we had. Market breadth, of course, was more skewed towards declines. Varun Beverages, names like PB Fintech, Ease My Trip, Schaeffler, Persistent Systems, Lemon Tree, some of the losers in the broader mid-cap part of the universe. And gains coming through in a recent listing like 5-Star, which was, by the way, limit up 20%. Westlife was higher, LG Equipment, Equitas and Puravankara, some of the other gainers. There is, of course, the RBI policy tomorrow. I think more than the quantum of rate change, it's the change in stance, if there is one, which will be very closely watched by the market. And, of course, follow-through price action in the US after what we saw on Monday is something which will be important when we come back tomorrow. Back to you.
Oh, it will be. Prashant, thank you so much for joining us with all those updates. Let's begin with some exclusive market opinion. Laura Gerrits of Rontier Global Advisors says she is optimistic about the long-term prospects of India. Meanwhile, Rahul Singh of Tata Mutual Fund says the valuation of new age companies has seen a reality check. Listen in.
One beautiful thing about the Indian market is it's broad. It's a broad, deep market. And so there's always opportunities in the market. It might not be Asian Paints today or Nestle India. It may be something else. But, you wait patiently. You have your list of companies you want to buy, and you just wait for some sort of opportunity, or something that gives you that opportunity to buy them. India is one of the rare markets, emerging markets allow you to do this, where you can build what we call umbrella valuations. The penetration rates in India are so low, you can apply it to almost any business in India with a good management team and just kind of let it do its compounding over time. If we look at PEs, they look high today, but if we look at market cap, versus the potential size of the economy, the companies still have a lot of potential to just grow and compound through the years. It was the only country in the world where there were expensive stocks where we didn't sell or take profit. And the reason is because I really believe this time around, that the tides are shifting. You're getting, movement of more business to India. You have the country investing in infrastructure and development. And so I'm really optimistic about the long-term prospects for India.
The cyclical recovery or in terms of the earnings, where we are seeing everything coming together nicely, whether it's credit growth, the NIMs going up and the credit costs coming down, you couldn't ask for more. And some of the banks are available at early to mid-cycle valuations, not their full valuations or not their full valuations in the last up cycle. So I think there is room to go. The valuations have come down to levels where they are probably only 2x the value which were there in terms of the pre-COVID valuation. So yes, there seems to be some amount of reality check, and the valuation sensibilities have returned in this sector. So yes, we would look at it, but again, as I mentioned, we should not look at it as a pack. Each company has a very, very different business model, very different dynamics, very different ownerships in terms of the private equity. So we will have to take a call taking all these factors into account. And again, let's not forget that the interest rate scenario globally is also challenging for some of these stocks and the valuations to sustain.
All right, that is some expert opinion. Coming into the second headline now. RBI has tightened the norms for securitization of debt. Banks are now barred from undertaking such exercises for loans with less than 365 days maturity. The move could impact several NBFCs. Abhishek Kothari is here with those details. Abhishek.
Well, this is an additional point put in by RBI with respect to what kind of loans can get securitized by NBFCs to other lenders, especially the banks. So the stocks could be in focus are the NBFCs with lower duration of loans, the likes of MFI, that is microfinance, and gold financiers. RBI has made changes with respect to securitization process, wherein they have said that loans with residual maturity or loans which are overdue of a period of less than 1 year, that is 365 days, but have served about 3 months of general interest to the NBFC, cannot be securitized. So this can have an impact on the securitization volume. Remember that NBFCs largely do borrow from banks, so they do securitize their portfolio with respect to priority sector loan targets for the banks. So quality of loans securitized will improve over here, and also the fact that shorter duration loans may not be securitized, which could have a rippling effect, especially on the shorter duration books like the likes of microfinance as well as gold financiers. Back to you.
Abhishek, thank you so much for explaining that to us. So how does this impact the sector? We caught up with Ramesh Iyer, who's the Vice Chairman and Managing Director at Mahindra Financial Services, to find out. Listen in.
So, normally we run a 3-year book or so, 30 months book. And if 365 days maturity cannot be securitized, normally that's not the portfolio which is offered. Always the portfolio that gets offered is where 6 months maturity is over and balance you have more than 24, 30 months left. So I don't see that to be a major change.
Okay, let's stick with news from the Reserve Bank. The Monetary Policy Committee will announce its policy decision tomorrow. Ritu is standing by with the key expectations from the last policy of 2022.
The Reserve Bank of India's Monetary Policy Committee is widely expected to hike rates by 35 basis points in this policy and bring the repo rate to 6.25%, according to the majority of the respondents to our poll. Now, this will be the 5th consecutive rate hike by RBI, but the pace of the hikes is expected to be slower, with some moderation expected in inflation and signs of a slower growth. Now, as far as the peak repo rates are concerned, the respondents were divided between 6.25 or 6.5%, with some even expecting peak rates at 6.75% in this hiking cycle. The inflation forecast for the year is widely expected to be left unchanged, and similarly, the GDP forecast of 7% for FY23 is also unlikely to be tinkered with in this policy. Now to the stance, where Will they pivot or will they not is the question. Well, not yet, according to our poll, with half the respondents voting for the stance being retained at withdrawal of accommodation, with a third expecting some tweak in the wording of the stance only. So in terms of what the markets will be closely watching out for, well, the wording of the stance, of course, and the voting pattern also, because any disagreements between the members of the MPC will be a focus area, because it was evident from the last minutes of the meeting that two of the external MPC members, Dr. Ashima Goyal and Dr. Jayant Verma, are likely to vote for a smaller increase in the repo rate or no hike at all, and some view this as a sign that the rate hiking cycle is close to an end. The other focus will be the transmission of rates, because if you look at the data on your screen, while RBI has hiked rates by 190 basis points between Jan and November, bank lending rates have only gone up by 80 basis points, so the transmission is just about 42%. And when you compare this with other countries, transmission is near perfect in countries like the US, South Africa, Australia, even to an extent in Canada, Mexico as well, but India really lags behind with just 42% of the rate hike transmitted. So this is an important metric that the MPC will keep in mind.
Oh yes, and the big decision that is awaited tomorrow. Ritu, we'll keep coming to you for more updates on that. To the third headline today, state-owned lenders Bank of Baroda and Bank of India surged today on bullish commentary from Morgan Stanley. The brokerage believes the two lenders offer the best relative risk-reward. Bank of India, Indian Bank and PNB hit fresh 52-week highs as well. Nimesh Shah is here with more details on this. Nimesh.
So the entire PSU bank basket is buzzing in trade today after Morgan Stanley has raised not only the target price but the earning estimate as well as valuation multiples for most of the PSU bank stocks. Yes, the stocks have done well YTD, but Morgan Stanley expects strong performance to continue on the back of higher margins, sustained loan growth and improving operating leverage for the next few years. Within the PSU bank stocks, Morgan expects BOI and Bank of Baroda are the best placed in terms of risk reward. In fact, they expect the loan growth to be sustained and the credit cost to remain benign for the next few years. So they've raised the target price on most of the PSU bank stocks. On Canara Bank, well, they have an underweight rating on the stock. They've raised the target price on Canara Bank to 345 now versus 280 earlier. On Bank of Baroda, the target price is now raised to 220 versus 195 earlier. On Bank of India, they've raised the target price to 125 now versus the earlier target price of 95, and that's the reason why that's been a big outperformer today. And on Punjab National Bank, they have an equal weight stance, but even there, they've raised the target price now to 60 versus 40 earlier. So across the board on PSU banks, target prices raised, earnings multiples are raised, and earning estimates are raised by Morgan Stanley, and hence the entire basket is buzzing today.
Oh yes, it was buzzing in trade today. Nimesh, thank you so much for all those details. Time for a break now, but stay tuned. We'll be back in a bit with the other headlines. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headline that we are tracking for you. To the fourth headline now. Crude oil prices rebound after plunging by more than 3% as the implementation of sanctions on Russian crude oil eased concerns about oversupply. Meanwhile, the relaxing of China's COVID curbs bolstered the demand outlook. Manisha Gupta is here with a wrap on the action from the energy space. Manisha.
Well, thank you so much for that. After a 3% decline last night in case of crude oil prices, we are back into some positive cues coming in right now. And absolutely, yes, in last 1 week, we have seen the OPEC and allies meeting where the output has been kept steady to an E7 price cap at $60 per barrel coming in on Russia. And then the European Union, which also has curbed imports from Russia. All seaborne oil imports from Russia have been curbed as of now. And come 5th of Feb, European Union will also curb all crude products from Russia as well. So this still is a developing story. Markets are looking at what the expectation right now is from some form of Russian retaliation coming in. Russia has spoken about that, but we still have to see a notification or some communique coming in from Russia. Until then, it is going to be very jittery crude oil markets from here on. Having said that, it also is about the macro situation where you have seen some strength come back in case of the dollar index, and all the data that came in from US last couple of sessions has been positive. So whether it is the US jobs numbers, factory activity and services number are better than street estimate, and that perhaps brings back the flavor that US Fed could be more aggressive going forward on the 14 December meeting rather than a 50 basis point meet. There could be some guidance decisions that could weigh onto the markets going forward. So as I said, quite jittery, and every week we have seen a $10 to $12 per barrel of a crude prices range, which is much higher than what you have seen in last couple of decades itself. Markets do believe that $75 per barrel is going to be a strong support going forward. On the higher side, 95 is going to be a resistance, and within this $20 is what you could be looking at the crude oil prices closing this year as well.
Yes, Manisha, thank you so much for that update. In fact, more on crude now. Uncertainty in oil market is hurting the prices, says Dan Yergin of S&P Global. Jeffrey Curry of Goldman Sachs also weighed in, saying oil market is still fearful of COVID policies and its repercussions on demand. Take a look on what they had to say earlier.
The threat the Russians have, at least they've threatened it, is to hold back on oil supplies and make the market tighter. So we're in a very uncertain and indeed turbulent waters. If we do have a global recession, but right now what we see is the oil market, can you imagine that it responds to every piece of news about COVID lockdowns in China? And if those lockdowns are lifted, you're going to bring some significant demand into the market that has now been sitting on the sidelines.
The problem and why the market is very worried on the front end of the oil curve is what if we get a disorderly forced reopening where people self-impose lockdowns. They just don't want to go out and interact with anyone because the caseloads are rising so quickly. That's the risk that I think people in the oil market are fearful of, where you actually have a very sharp contraction in demand, and then you're reopened, and then you get the positive benefits later on. And I think that's the big fear factor in the oil market.
That is all about crude oil prices. But Manisha is back with us. Metal stocks fell today on softening metal prices as the market prices in hopes of further easing in China. Hindalco and JSW Steel closed in trade with cuts of 2%. Manisha, tell us more.
After weeks of gains, the metal prices have come under pressure, and that is because you're looking at stronger than expected data from US, whether it was about services sector, factory activity, or the jobs numbers, they came in better. In other circumstances, this would have been good news for the industrial metals, but right now markets seem to be tying everything to an expectation of a further rate hike, and all data now adds up to rate hikes that can continue from US. That has impacted the US dollar index, which has rebounded from its lows. The US treasuries as well gained, and that put pressure across asset classes, including equities and commodities, and the metal prices also. Having said that, the China easing its COVID restrictions is something that the markets continue to take as positive, is the reason you haven't seen a very sharp sell-off coming to the markets here. Apart from that, it also has to do with lower inventories, energy concerns in Europe that will continue to support the metal prices going forward. If you look at the last 24 hours, we have seen the copper prices decline by 2%. Aluminum fell 1% overnight and has traded a percentage point lower in the day-to-day as well. Markets do believe that it perhaps is going to be the sell on upticks rather than buy on dips kind of a strategy going forward for the metal prices for the very near term.
Manisha, thank you so much for joining us with all those updates from the commodity space. Meanwhile, demand is picking up in the cement sector. After a dismal quarter, the industry expects a double-digit growth. Listen into what Sri Digvijay Cement's chairman Anil Singhvi and HDFC Securities Rajesh Ravi have to say.
The demand is picking up. One has to take October and November together because last year Diwali was in November and this year Diwali was in October. So if I take the two together, I'm very, very happy that demand is really now perking up. November especially was very, very good, which is really boding well for demand to go on till about May or June before the monsoon. So I think we'll be growing much better than what even I was expecting in September. September was looking a little subdued because demand was just not coming into the double digit. But from now on, I think the demand will be double digit till at least May or June.
For the quarter gone by, the industry average was around 530 rupees EBITDA per ton, and it was obviously one of the worst quarter in the recent, I would say, obviously in at least 7-8 years. And things are obviously the industry for sure is out of a storm, and in Q3 onwards there are multiple triggers. As he also concurred that demand is holding up well, and that is where we believe that there should be at least 100 rupees improvement on the realization side sequentially.
That is all about the cement space. To the fifth headline today, IRB Infras surged 2% on the back of robust traffic growth in November across all projects and all vehicle categories. Vivek joins us to get us all those details. Vivek.
Well, that's right. So IRB Infra, this particular stock has been a stock that's clearly outperformed, from Q1 to Q2. This is mainly on the back of the fact that toll collections that were seeing quite a bit of a dampener as far as last year was concerned has seen very robust growth and very robust recovery. When you're looking at the numbers, the gross toll collections for November was up almost 6.5% on a month-on-month basis, coming in close to the 366 crore mark, and on a year-on-year basis was up almost 40%. Now, also important to keep keep in mind that on the base year, that is November 2021, due to the farmer agitation protests, toll collections were actually stopped. So the numbers optically look a lot higher when you're comparing it on a year-on-year basis. Nevertheless, it's a very strong set of collection figures that have come in, and along with the deleveraging that the company has done, this particular stock has clearly seen a re-rating in the last couple of trading sessions.
Okay, Vivek, that is all about IRB Infra. Thank you so much for those details. Moving on, Vedanta tells CNBC-TV18 it is not looking to divest its steel business, but will expand capacity to rank amongst the top 5 steel players in the country. The stock was down by over 1% in trade today. Listen into what the management had to say.
That option is not there at this point of time on our table. Currently, we are busy increasing the capacity of electro steel by finishing the unfinished plant from 1.5 million ton to 3.5 million ton. So with 3.5 million ton at electro steel and 1 million ton at value-added business in Goa, the capacity will go to 4.5 million ton. But you must have also seen that we have taken action to integrate our operation by acquiring the mine, Barmil mine in Orissa. So this gives us the option to increase our steel capacity from now on and remain a player to reckon with in the market. And if we will stay in the steel market, we will definitely like to be among the top 5.
That is Vedanta, but we have a lot of stocks in focus as well. Astra Microwave zoomed 5% on its fundraise plan. Meanwhile, Bajaj Consumer zoomed 2% on news of a likely buyback. Vaishta is here with a wrap on these two stocks.
Well, there are two stocks that have been in news today. One is Astra Microwave Products and the other is Bajaj Consumer Care. Let me start off with Astra Microwave Products, wherein the company is going to be considering a fundraise of up to 400 crore rupees, and the street has been cheering this news. In fact, the stock has been up by 4-5% today itself, and in the past 6 months, the stock has given returns in excess of 40%. So this is also in consideration of what has been going on in the defense and aerospace industry. There are a lot of industry tailwinds which have been going on. So there are other defense stocks also which have been in focus. Moving on to Bajaj Consumer Care, wherein the company is considering a share buyback on the 9th of December. And as of 30th of September, the company has a cash and bank balance cumulatively of 18 crores. And if we include the investments, the amount goes up much more. Though in the past 6 months, the stock was up by about 29-30%. But on a year-to-date basis, the stock has not created much wealth for its investors and has been in the red. Back to you.
Vaishta, thank you so much. So those were the stocks in focus today and the market action as well. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.